This is week 3 of our series, and I'm logging into my account to make my trade. So what you'll see already is that the portfolio is down quite a bit today, and also overall this is week 3, and yeah, you know that I invested 2,000 exactly, and we're down about 50 euros. So it was quite a turbulent week, and we can discuss this later, but let me just first make my trade. And I have a good 1,000 euros available, and I'm gonna invest 1,000 now. 1,000 in my MSCI emerging markets. Review the order and buy. Perfect. I think it all worked out, but let me just refresh the page. And there we go. We're at almost 3,000 euros. So the market is down a little bit today and also overall, but no big deal. We keep on going. Okay, so much about my portfolio, but there was so much development in the market that it would be crazy not to talk about it. So it was a wild week, and I want to give you a market update and give you some context to what happened. So what happened? I'm first showing the development of the ETFs that are typically representing the different parts of the world. You got the MSCI World, which is the developed market, and then you got the MSCI Emerging Markets, which represents the developing economies, and this is the one that I'm investing right now in this series. And you see both are down, and the MSCI Emerging Markets is down even more. Now, over the year, emerging markets have done way better than developed markets, but this week they've been hit particularly hard. And yeah, I'm gonna dive into it. I'm gonna talk about developed markets for a bit, and then about emerging markets, and then about some individual stocks. So let's start with the developed markets. Here we see that the first two lines, the S&P 500 and the NASDAQ 100, they represent the US. And then the other ones below that, they are the other countries. So Japan, UK, Canada, and so on. And you see that the US are already way down, and they are the biggest part of the index. And NASDAQ is down even more. And that means that the sell-off or the losses were driven by tech companies, because the NASDAQ represents the tech companies even more so than the S&P 500. So yeah, that's the first part. The US are down. Why is that? Well, the main story of the week, AI bubble. So everyone's wondering if the AI stocks that have been driving the returns over the past couple of years, whether they are overvalued. And front and center is NVIDIA, the most valuable company in the world right now. And it's worth more than $4 trillion. And the whole question is whether there's just circular business between OpenAI, NVIDIA, Microsoft, and so on, and they just push each other's valuation up, but really there's nothing behind it. And those crazy profits that we're pricing in, they're never gonna come. And so NVIDIA had their quarterly earnings call this week, and the question was, can they actually show such great results that everybody is expecting? And interestingly, they did. It was super strong. They not only beat the already high expectations, they also raised expectations, I think, even for next quarter. And so stocks went up, and you think it's all good, the rally continues. But in fact, the opposite happened. Somehow it wasn't enough, or just the market thought this is not real, or maybe this cannot go on forever, or at least they said, okay, we had a nice run, let's take some profits, let's take a little bit of money out of the market. Anyway, the result is that no one knows what's happening, but NVIDIA posted amazing results, and still all the stocks are down, and the main story is AI. The other story here is the interest rates. So it seems that the Fed doesn't want to lower interest rates, and so if interest rates remain high, it's further headwinds to stock returns. So dollar stronger for longer is the catchphrase, and so we'll have to see what happens, but it doesn't seem like the Fed wants to lower interest rates. Yeah, what else happened? I think Japan, same story, but for them it's there's a tech sell-off, and the interesting part is that the central bank there wants to raise interest rates. Okay, so it's even the opposite. They also have a stimulus package discussion. I think the market still needs to digest that. I think stimulus is typically good for the markets, but then again, Japan is so over indebted, it's even crazy. So I'm not sure. Then you got Germany. So Germany is really way down. Horrible performance this week. And the story is that manufacturing is contracting even further. Germany is a manufacturing country, and if the purchasing manager index is down, so the guys who are buying and they say, well, we're not so confident about growth prospects, then it's really bad for the economy. And here we got Siemens, I think it's Siemens Energy actually, down 10%. Horrible. And Rheinmetall also down. So Rheinmetall is a defense contractor, so they're producing equipment for war, for defense. And so they have been hit overly hard. Why is that? Well, it could be Ukraine. You know that Trump put out this peace deal. Think about what you want. It might be a bad deal, but if it leads to peace, then the fighting stops, at least for the moment, until Russia attacks again. And yeah, that means no more business, or at least less business for the moment for Rheinmetall. So that's a bit the story. Overall, AI dominates everything, but then there are some country level developments as well. In the emerging markets, we got China leading the losses, so they're also mirroring the global development. They have a tech and AI sell-off, maybe also some concerns over the domestic growth, but yeah, mainly it's an AI story. Taiwan is also incredibly exposed to the AI bubble, because if they have their foundries where AI chips are produced and things like that, then if the AI bubble bursts, they're hit particularly hard. And TSMC is the Taiwan Semiconductor Manufacturing Company. They represent a huge part of the Taiwanese stock market. So if the AI bubble bursts, that's really bad for Taiwan also. And Korea, apparently also same story. The only sign of light is India, and they really, had a pretty much flat week, even up a little bit. And I think that's because they have strong growth prospects, and they're not so overly exposed to AI, I think, and just some real solid internal growth. And that's almost a safe haven these days. Now, let's look at some individual companies that are part of the MSCI emerging markets. So basically the companies I'm investing in. Now, those are just the top 10 biggest holdings in the ETF. Overall, the ETF has I have to check, but 1,000 companies in there. And so those are only a fraction, but of course the biggest ones of the whole ETF. So we got a couple winners, couple losers. We got a lot of losers, but some lost really hard. But the winners are HDFC Bank, that's in India. Anything that's not AI seems to be a safe haven right now. And then we got Reliance. It's a very interesting Indian conglomerate. They do everything: oil, gas, tech, telco, retail, and so on. And yeah, they are really a proxy for India overall. Generally, a lot of businesses are doing really well there. On the other hand, you got the biggest losers this week. Xiaomi in China. They produce hardware, they produce phones, and there's some concerns over growth and demand in this area. And also there's a strong competition. And lastly, we got PDD. This is the company that has e-commerce companies, and Temu is probably the most well-known one. There's also an e-commerce sell-off, so those stocks are under pressure. Anyway, this is the story of the week. I think it was a wild week. We'll observe what's coming next. But yeah, there's not much more to talk about. We'll talk about other things in another video. But for the moment, just a wild week. But we sit tight and we continue to pursue our strategy.